The principle of relative distinctions. Alright, so what we want to do is structure price flow. We want to look at a chart that looks chaotic and messy and be able to make some sense of it, okay? So what we're looking for are things that are related to each other. I'm going to use a simple definition to do this. Whatever amount of data, your frame you're going to use, the biggest swing, gap, etc. that you find on the board is going to be your major. The next biggest will be your minor. Here we're going to use swings. This is like continued behavior from the continued and change in behavior video. If you can find something that's related to each other, it has a relationship to each other, you're now finding something in a market that's going on. You're finding a footprint. And then we can measure and we can see when that changes as well. And we can structure and make sense. So here we're going to use relative swings, but we can use relative gaps or anything else. I'm making some definitions here for relative swings. Same size basically. So we can isolate and see a chart. Major is the largest reaction leg in your frame, right? There's the reaction leg, impulse leg. Minor is the next largest. This will help us frame up a market. I purposely chose something that looks a bit messy, but it's pretty simple. Learn to isolate your structures, your swings. And so we'll see, even though it looks messy, we have a reaction leg, we have a and you see that they're about the same size. They're relative. We now have relative swings in a market. We can measure. We can draw. Minor is the next largest. It's the same definition. A new low confirms a swing high. So we can come in here and look for the next largest in our frame. And what we're trying to do is orient ourselves to a market. So this is about this big. So if we put this over here, you see, no, it's a different animal. It's not related to this guy. Not closely related. Maybe a distant cousin. This guy is related. So we're finding and making some sense to a market. And from here, this leads to all kinds of interesting setups, ways to understand the market, ways to break a minor into a major swing. But it's an understanding. So we took this chart and we have a pretty good sense now of what's going on and to make decisions. We can now draw very precisely off of this chart. It doesn't matter if we're using gaps or anything else. It's relative. Find something in what looks like chaos, because nothing is random in the markets. It's not random. There are people doing things. We're just looking for what they're doing. For instance, we can use gaps. This gap's about yay big. It's a relative gap. You have to do a lesson on gaps. And you find something that matches that. And you'll see they're doing some things over and over and over again. Alright. So as you see, we go from this to seeing the waves in a market rather easily. There's a blue animal, and then there's this red animal, minus all of the other noise. It's a very simple structure. Alright, so I don't think we've looked at a stock yet. So let's go look at a stock, something we have some time to look at here in the future. Alright. Let's look at one of the guys I trade. And so we can come to this market. This is Pump. I have no idea what they do, but it's a daily equity. It's a daily stock. And so as you're trading, as you're measuring, you want to see the order in this market. And so we structure. What are the definitions? Major is we're going to do it via swings. Major is the largest. reaction leg on the board, and minor is the next largest. What you'll often see when you learn to do this is that often there'll be a minor that breaks and turns into a major. So take a look at this market and structure the swings. See them? New low. There's a reaction leg. Another new low. Another reaction leg. And so we can see over a period since April, this thing is doing same size swings. By the way, this is continued behavior. And if we want to see the minor swings, the minor is going to be the next largest. So you can see the minors, and then you can see a major breaking into or through the minors. And this is an interesting dynamic, and this is live here. And so we can see, once we isolate, when we draw swing to swing, price completes that cycle. When we draw swing to swing, price completes that cycle. Alright, let's do a little bonus here. Since we talked about process, can we see the process of the swing? Can you see the process of a pivot? See the step 1? Zoom, step 2, step 3, step 4. Can we see the process? So I'm combining videos now, but it's here, right? Do you see this? When you learn to see these actions in a market, see them hold, 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 hold. Step 1, contraction, zoom. Step 2, zoom that contraction. Step 3, retest it. Step 4, new, zoom low and through that same contraction. And so now we're also trying to tie these videos together as well. You're also seeing the process of a pivot within the swings. Alright, and we'll see what this market does later.